I'm now happy to announce that there will be no income tax payable up to income of 12 lakh rupees. I propose to 1. Remove 7 tariff rates. This is over and above the 7 tariff rates removed in 23-24 budget. The revised estimate of the fiscal deficit is 4.8% of the GDP.
ये बजट एक फोर्स मल्टीप्लायर है। ये बजट सेविंग्स को बढ़ाएगा, इन्वेस्टमेंट को बढ़ाएगा, कंजम्पशन को बढ़ाएगा और ग्रोथ को भी तेजी से बढ़ाएगा।
ये भारत सरकार का बजट है कि बिहार सरकार का बजट है? आपने बिहार के अलावा किसी और प्रदेश का नाम सुना वित्त मंत्री जी के पूरे बजट भाषण में?
The infrastructure is not going for the rest of the country. It's only going towards Bihar because we all know that this year is the Bihar election. So basically, for essence, and Maharashtra has been ignored, and Tamil Nadu, there's not a single word for Tamil Nadu or for any other southern states.
Hello and welcome to this special budget broadcast. This budget puts more money in the hands of the middle class with income tax sweeteners, also stays the course of fiscal consolidation, but only a minor increase in capex outlay. Further, it continues to remain optimistic around divestment but lowers targets for FY26. I'm Prashant Nair. With me, my colleagues Nigel D'Souza and Mangalam Malu. We're also joined by Amit Jeswani of Stallion Asset Private Limited and Pankaj Tibrewal of Ikagai Asset Managers. Gentlemen, great to have both of you here as well. Nigel and Mangalam, thanks very much for joining in. The story of the day, I think, arguably was FMCG consumption. So, Mangalam, just wrap it up for us. What happened and how did the market take it?
You know, the most important thing that happened in this budget was the income tax cut, and as a result of which people have more money in their hands, which they're left with after paying lesser taxes as compared to last year. So just to quote the finance minister, no tax incidence on a person earning up to 12 lakh rupees. You save 70,000 rupees every year if you are earning more than 18 lakh rupees, and if you're earning more than 25 lakh rupees, then 1.1 lakh rupees every year is what you save as against the previous tax regime. All of that made all the consumption stocks, specifically the urban consumption stocks, a lot happier. Why is that? Because over the last few quarters, if you've seen, urban consumption has been hitting a bit of a wall. At the same time, that accounts for nearly 65% of FMCG companies' sales. We've heard from all the managements as well. So companies which benefit from a revival in urban consumption sentiment. You had the likes of Jubilant FoodWorks, Zomato, Avenue Supermarts, maybe something like a Trent, etc. All of them doing well as well. From the discretionary side, even from the staple side, the ones who have higher, salience coming in from urban India, the likes of Nestle, which gets nearly 80% of its revenue from urban India, or GCPL, which is about 70%, Britannia, Marico, all of them recovered from lows. So that was a positive. Add to all these things the fact that these consumption stocks were under pressure for underperforming over the last couple of years, having come back to their 10-year average valuations as well, and with no incremental benefit or incremental growth coming in or attributed towards capex and railway themes along with defense themes which have been doing well for the last few years, maybe capital shifts towards the consumption space from here on when it comes to growth from here. So maybe that was the reason. We're going with seize the moment for this budget. Maybe it's time for consumer stocks to go ahead and seize the moment. Okay, all right, Mangalam, thanks a lot for that. Well, let's welcome our guest, Pankaj, as well as Amit. Thanks, gentlemen, for joining in. Pankaj, let's come across to you first. I think you were hinting to be in the camp that wanted a bit of a capex push. Now, we've got a consumption push and maybe a pretty decent capex outlay as well, though I think most on the street wanted a little bit more on that front. Your reading of the budget, and would you jump more into some consumption-related names now?
Good afternoon, Nigel. Our sense is that we went into the budget with very low expectation. We means the market. And there were concerns that there could be some tinkering with the capital gains tax, how the fiscal number maths will add up to. I think the FM has done an excellent job, if you ask me, in managing growth along with fiscal. And the maths we were looking at behind the fiscal and the assumption on taxation seems to be very realistic. So our sense is that there is an impetus towards growth, but this time it's from investment-led to CapEx, consumption-led. And I think it's very important to take directions from the government. If you remember, government 1.0 pre-COVID, I think it was all about consumers, middle class, MSME, exports. Post-COVID, the government direction right from day one was manufacturing, infra-led growth, PLI, and government gave a huge push towards it, where 3 lakh crores became 11.5 lakh crores. Now, since June 24, we have started to see indication that this term of the government could be all about the welfare of the schemes back again. And first you saw the 12 states announcing some welfare schemes to the tune of 3 lakh crores, followed by this significant concession of 1 lakh crore in the hands of people. And if it is followed by interest rate cut, most probably in the 6th Feb credit policy, it will clearly show that government first wants to bring growth this time through consumption, which has been beaten down for the last 4 or 5 years.
And I think
market is clearly showing that shift. Maybe too early to take that call.
Right.
But I think normally these things starts to build in over a period.
And I think
my only sense is that when I look at the portfolios across the board, largely it's consumption infra-led right now across the portfolios, because the last 4 years the investment theme has done so well. Most of the portfolios are tilted across the board towards defense, railways, capital goods. And if that continues from a consumption perspective, I think people will have to make that shift. And that shift was clearly reflected today in the market. Maybe next few weeks and months will suggest us whether it was an inflection point and there is a theme change which is happening. I believe it could be that you could be back from value to growth again, and growth this time in consumption, not infra.
Okay, all right. You've been, over the last couple of months, we've chatted. Pankaj talked about QSR and a few consumption names yourself. We'll come back on specifics, more specifics in a bit. Amit, your sense for the first time in many quarters, you turned a little cautious. Does today's budget change anything? Pankaj used the word, we'll find out in hindsight whether this was a bit of an inflection point for consumption names. What did he make of it?
Prashant, it was a super budget. It was a time had come in markets where only 10 stocks were growing. Like if there are 100 stocks across consumer, paints, autos, etc. Point had come that only 10, 15 stocks were growing and the rest 80, 90 stocks were not growing well. And too much capital was chasing those 10 stocks. And we were also doing the same thing, to be honest. But that worked very well for us in 2024 and 2025. Of course, money left those stocks because money just wanted to leave everything, and that trade got a little disturbed. But coming back, this is a super budget. While that 12 lakh is the game changer for consumer stocks, I believe there is some sentiment change, because if you think about it, paints were growing at 0%. FMCG companies, majority of them were growing near 0%. Even the best retailers were not growing more than 20% in the country. So this is a pivot point where the capex on infra, etc., is the growth of capital outlay is now near 0% YOY. So market chases growth, and markets will keep finding newer places of growth. And looks like consumer after 2-3 years will make a comeback. It will not just be the top 10 companies. I think the entire basket, because the valuation is now not as expensive as it used to be. So hopefully we will make money on both sides. The good part, the companies who are executing in bad times will execute even better in good times, and the companies who are not executing in the good times, the bad times, will have a cyclical kind of recovery of valuation and earnings coming in. So let's see. I'm optimistic. We've had a rough January, but I think February has started on a super rocking note.
All right, February started on a super rocking note. The good part is that February started on Saturday itself. The markets were trading. We'll keep an eye out on how it pans out, when full volumes come by on Monday as well. But consumption wasn't the only thing that we were looking at in this budget itself. It was, the insurance space as well. If you look at the finance minister, she brought cheer to the insurance space as well with an announcement of hiking the FDI into the sector. But at the same time, there were worries about insurance seeing lack of growth because people opted for the new income tax as well because of the relief that came in from the finance minister on the income tax too. Yash joins in to tell us what the insurance sector takeaways from this budget have been. Yash.
Well, Mangalam, three most important takeaways. The first one, as you started with, increasing the FDI, the foreign direct investment limit in the sector, taking it to its optimum point of 100% from the current 74%. The last time when it was raised from 49 to 74, it got very little attention from foreign players in terms of bringing in the capital. But the regulator, the government, was confident that if a complete autonomy is given to foreign players, where they decide how much capital, the business directions, the policy decisions, then that capital will indeed come in. So increase in FDI was the first one, largely positive for the sector and the unlisted players more than the listed players. The second announcement, which was a dampener and which was largely expected also, was the push which will come from the government side on the new income tax regime. Remember, the new income tax regime does not give you any exemptions like the old one under ATC for life insurance and ATD for health insurance. The government said the big thing, which was essentially no tax for an income of up to 12.75 lakhs if exemption or rebate is taken, and that made the new income tax regime a lot more attractive. The fear is that if people start moving from the old tax regime to the new tax regime, then the purpose of buying insurance for tax saving gets defeated, both life and health insurance. Hence, that was the fear, and the stocks reacted to that particular news. Though HDFC Life on the channel said just 2% of their new business premium comes under ATC. For the sector, it is about 5 to 7%. The third one was taxation on ULIP. So far, ULIP premium of more than 2.5 lakhs, the returns which come in were taxed as other income, which gets computed into your income tax, and accordingly slab-wise you're taxed. But here the government has clarified that now it will be taxed as capital gains tax, which is 12.5%, which will be the lower range of tax as compared to the higher marginal rate under income tax.
Okay, all right. Thanks a lot for that, Yash. Pankaj, does this sector now come under your radar? You know, insurance companies, they were all over the place today. Initially, they saw a big downtick because a lot of people will move to the new tax slab, but then we had clarifications coming in there. Vibha as well of HDFC Life did clarify only 2% do fall under that particular bracket. Your view, Pankaj, on insurance stocks?
So overall, Nigel, I think insurance companies are very well positioned. If you look at insurance, when they do well, whenever the yield curve steepens, and I think that's a time when really the insurance companies does well, because the non-par, the protection, the annuity part, they really make money in that. So my sense is that at lower levels, insurance could be a great opportunity from a 2 to 3 year perspective. And our view is that the yield curve is going to steepen from here on. And on 6th of Feb, if the RBI decides to cut rates and there's some steepening in the yield curve, probably insurance is a great play from overall. And valuations have come off over the last 3 years. Insurance as a sector has not given any return. And these are solid franchises from a medium to long-term perspective. And we ourselves are evaluating both the general as well as the life players in this space.
So Pankaj is having a look at that. Amit, does it come under your radar?
So insurance, we don't have any positions as of now. The growth's not picking up. If you look at the entire pack, the insurance pack, the growth has been very mediocre for us to get in. So we've not been we like the marketplace, the market leader, the marketplace market leader, the bazaar here, but that is also a little expensive, and markets have taken the last January, we sold out Policy Bazaar way back, but markets are looking at valuations also very aggressively since January. So you cannot just chase growth. You want growth and reasonable prices both going forward in 2025, 2026. So we let's see. We don't have any positions, or we're not even thinking in those lines. Very complex. Life insurance is a very complex business to understand. It is nobody understands embedded value. At least we don't understand embedded value, how to calculate what futures will look like, because you're taking money in now, you're insuring something that will happen 20 years in the future. It's very, very difficult to understand this
Stocks
game.
basically.
It's very tough. Like, we don't understand it very well. So we only focus on general insurance. That is easier to understand.
Okay.
Yeah, but I don't see the growth rates that we need.
Right. Got it. Before we wrap, Pankaj, it's based on one event, it's very difficult to change one's view or kind of, suddenly go into something. As a trader, you can do it in and out and all of that stuff. But if the game this time around, the Saransh, as they call it, out of the budget is more money in the hands of the consumer, it's figuring out where that money will go, right? Amit had some ideas. If you had to pick out one space, could it be, again, from a listed standpoint, we're trying to connect both. More hands in the consumer, which companies, listed space. So what would those be? One or two areas you think? Briefly, Pankaj.
So, Prashant, always remember that event could be one-off, but inflection points normally come like this. And if you remember 2021, 22, when we started to get positive on the entire investment theme, we didn't know that in the next 3-4 years, the push from both global and local would be towards investment in terms of PLI, in terms of Make in India and others, and government push. Probably this would be the time when probably government is indicating to us that the next couple of years could be welfare for the people. So we should not ignore that direction from a portfolio composition and portfolio construction perspective. And coming to consumption, I think it's a broad sector. What we are positive on is the consumer durable segment, home building segment, not so much on FMCG, but retailing, value retailing, and companies which have executed well in the past with a strong brand franchise. Right. And don't forget, Prashant, that many B2B businesses today, which lie in the investment theme, are price to vision, not price to perfection also, but price to vision. And there we need to be a little now careful that there could be significant derating if growth is below expectation in terms of order inflow or the government push towards spending.
If it is indeed an inflection point, Pankaj, and I take your point completely. That's why, as they say, investing is simple, but it's not easy, right? I mean, because something has worked for very long. If something is changing, it's very difficult to make yourself believe that, well, this is it. But that's essentially what I guess you have to do, and you have to believe as well. Mangal, you want to make a point? Sorry?
No, I was just saying that when he said that, it's not a day that makes the market, or it's a period of time. Maybe this is the time for the consumption stock. So I guess we'll just wrap up on this session.
Okay, all right. Well, we'll have to do that then. Thanks a lot, Amit, as well as Pankaj, for joining in. We've completed